All right, guys, back to work tonight. Weekend's over. That's okay. Get a big week ahead of us here. Second week of the month of May. It's Monday evening. It's May the 10th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the S&P, got the Nasdaq, and we got that gold on our radar for tomorrow. Boy, speaking of tomorrow, Tuesday's trading session, get a bunch of big news tomorrow. I'm actually get a bunch of big news all week this week. More news tomorrow morning, though. Got these big moves down on the Nasdaq and the S&P today. I'd love to sell some of these pops tomorrow, right? I'd love to sell some pops on the S&P, sell some pops on the Nasdaq. And, you know, gold is overall bullish right now, but I'm looking for a nice rotation off the high of this range. Maybe a big pendulum swing going lower on the gold for tomorrow. Lots of great setups, lots of great opportunities on my radar for tomorrow. By the end of this video tonight, you'll know exactly how to capitalize on those opportunities. And before we jump in, though, and get this video going, though, I just want to make sure to remind you, subscribe to our YouTube channel. You know, we publish this video newsletter every evening, Monday through Thursday, with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so please make sure you subscribe. And when you do, hit that little bell icon so you always get notified every time I publish something new. Also, too, if you have any questions for me tonight, you can always drop those questions for me in the comments section. I would love to answer all your questions, so don't be bashful about typing in those questions. And if you guys tune in every evening, if you enjoyed this video as much as I enjoyed making it for you guys every evening on this YouTube channel, do me a big favor. Help me support this channel by hitting that like button, that thumbs up button for me. I really appreciate you guys supporting this YouTube channel by tuning in every evening, subscribing, and don't be afraid to type those questions in if you got them in the comments section below. But enough of the intro. Time is ticking. Tuesday is right around the corner. Let's get these charts all. We're going to get a bunch of really great opportunities we see setting up here this week and specifically for tomorrow. Now, as I mentioned before, got big moves down, right? Big move down on the S&P, big move down on the Nasdaq. I would love to short some of these bounces, right? I got a bunch of key levels of resistance I'm watching overhead. You know, really at this point, it's all about how far we pull back, right? You know, whenever you get these big moves down like this on the E-minis, Nasdaq and the S&P are pretty much in the same boat right now. We know the market's bearish. The big question right now is, you know, how far of a pullback do we get? So there are a couple different ways I trade these strong moves: shallow pullbacks, modest pullbacks, deep pullbacks. And I'll talk about, you know, my favorite entry techniques for, you know, shallow pullbacks, deeper pullbacks for tonight. We'll talk about specifically how to find our way into those. Over on the gold, though, gold's kind of interesting, right? Because gold isn't really a bear market just yet, but you got that range underneath us, and it does look like these buyers have tried a couple times, and I would love to get that rotation back down to retest that low, that pendulum swing around that 1820 area at the other side of that trading range. So we'll love to sell some bounces, short some pops on the E-minis. Got a couple different spots I'm watching for on that. We'll love to capitalize on that rotation off the high here on gold. Now, before we get our hands dirty on each of these charts, I do want to make sure we are all on the same page for tomorrow. Tomorrow, of course, is a Tuesday trading session. Now, it's the second week of the month of May, which usually isn't a very busy news week. That does not mean the markets won't be busy overall, but generally speaking, we don't have a lot of big news the second week of the month. Well, that is not the case this second week of the month. And if there's one week of this month that might be the most explosive, this is it. And you'll see why here in a second. We look at tomorrow, for example, right? Tomorrow, Tuesday, May the 11th. This is probably the smallest news of the rest of the week here. It's the job openings, layoffs, and transfer survey. That is a big, powerful number tomorrow, and it's probably the smallest number, the smallest news report we're going to get for the rest of the week. That is the big news tomorrow on my radar at 10 o'clock Eastern time. Now, we'll be in our trade room tomorrow morning from 8 o'clock on, right? So we'll be here earlier than 10 o'clock. But if you could only be at your desk tomorrow for an hour, I would definitely make sure you carve out some time to join us in the trade room from like 9:45 9:45 to 10:45 because that JOLTS report, the job openings, layoffs, and transfer survey, as you can imagine, in a world that is reopening after a lockdown pandemic, the job openings, layoffs, and it's going to be it will be on everyone's mind tomorrow, or everyone's radar at 10 o'clock Eastern time. So that is the big news I'm tracking for tomorrow. It's a pretty big news report, and that's kind of the small one this week. What I'm most excited about, I don't want to waste too much time on the calendar. What I'm most excited about, though, are the CPI reports, the PPI reports, and the retail sales numbers. I mean, these are incredibly important this week. You get inflation CPI, inflation PPI. Unless you've been living under a rock the past couple of weeks, or you never go to the grocery store or the market, whatever you call it, right? Inflation is on everyone's mind right now. It's all over the newspapers. Everyone's talking about it. So obviously those reports are going to have the potential to be explosive market moving events later this week. Then of course you got retail sales, right? We saw a crushing retail sales number in the month of April. Will we be able to hold that? Because right now it doesn't feel like that's going to be possible to get a big number like we had in April. That could be another one of those big misses like we saw last Friday, right? That non-farm payroll report come out. So again, I don't want to tease us too badly. We got some big news coming later on this week, and we'll obviously talk more about that as we go into the details later on this week. For tomorrow, though, that JOLTS report at 10 o'clock Eastern time, that's the big one on my radar. And again, don't forget, every morning we get together in our trade room and we're going to execute this plan together. I would love to have you there, right there with us. You know, learning to trade is a lot like learning to ride a bicycle, right? You can't read a book about it. You can't watch a video about it. You got to go out and do it. And we do it together every day, 8 o'clock Eastern time. You can grab all the information. Come out and join us. I'll put it in the description of this YouTube video, or I'll put a big button for you right below me tonight on the trading blog. So now you guys know kind of what I'm excited about this week here. Tomorrow should be a great day because of that big move down today, but we get some big news reports coming out. The second week of the month here is probably not going to be that quiet this time around. Now, back to our charts here. S&P's ready, Nasdaq is ready, gold is ready. They're pretty much all good for shorts right now. S&P, of course, and Nasdaq are obviously bearish. Gold is the tricky one, but honestly, if you know me, you know I love range-bound markets, and that looks to be probably the easiest of all the markets for tomorrow. Let's break these down though one by one to kind of show you why I'm so amped up for tomorrow. Starting off first in the S&P 500. Now, one thing about the S&P, which you'll also notice about the Nasdaq, is we got some really big kind of three-legged moves today, right? We saw one leg, two leg, three legs down. Whenever we get these big, these big, bold moves in one day, usually the following day is likely to end up in a range. It may not be obvious at first, but a lot of times the following day does end up going sideways. So that should be on our radar. We should be anticipating some sort of range or some consolidation tomorrow at some point in the day. Right now, a lot of times what will happen is you'll get these big moves down like this. You'll get that pop, and it will basically settle in, right, later in the day like that. That's one option. That's one scenario we may have, right? And I would love to short those pops. Another very likely scenario is we just simply start going sideways down here and we have some sort of range here develop. So that's the first thing that kind of comes to mind here when I see this chart. I think, okay, there's a good chance we're going to get that bounce. There's a good chance that we're going to see a range at some point tomorrow. Now, it would be helpful to go out and kind of turn back time here, and you can see what's going on in the big picture right now on the S&P. Not the same thing on the Nasdaq. Nasdaq's in a little bit more difficult situation than the E-mini right now, but you can see if you've been following along in the last few weeks, we've had that big range around 41.80. We had that move down, and notice what they did. They completed that big pendulum swing all the way back up. I mean, pendulum swings, again, if you know me and my strategy, right, you know how much we use these pendulum swings, and you can see why they work so well. So the pendulum swing is a great job at anticipating, we don't know if this will be the turning point, but it definitely was, right, in this case. So the buyers pop it up, right, that big non-farm payroll number that came out on Friday, that big, huge miss. I told you guys last Thursday night on my last newsletter, I told you don't go wasting all all your bullets on bad trades on Non-Farm Friday. Why? Because Reaction Monday, which is today, is coming right around the corner. And it was a lot easier to make money today than it was making money last Friday, right? So now you know, write down in your trading journal, don't waste those bullets on Non-Farm Friday, right? Usually the Monday after is going to be a much easier day to trade than trying to trade that crazy price action you see after Non-Farm Friday. So we are, bottom line is we are back inside that range now, which would make sense here for this market, right? To start to tread water and go sideways here, especially after 3 big legs down. So we're bearish, anticipating a range here. I've got some levels below me, the 63, the 40 half, and that 20 half area. Those are the levels I'm watching for as we go lower. I would love to sell some bounces, right? Like I mentioned a couple times already. The big question we have, though, in these type of situations is how deep will the pullback go, right? Because sometimes we get these big moves down, and all we get is a little trap, right? Sometimes all we get is this really shallow pullback here, but sometimes, right? Sometimes the market really V-bottoms and we get these really deep pullbacks. So in these situations, I always try to prepare for what's my plan for a shallow pullback? What's my plan for a modest pullback? What's my plan for a really deep pullback here, right? Coming up off of those lows. And those are kind of my favorite trades for tomorrow. So if I can kind of sum up, what would my favorite entry setups be for tomorrow? I would look for a shallow pullback trap, a deep pullback failure, and a really deep pullback nested. Let me show you how it works here. Now, the thing is, I want to find levels of resistance up overhead right now. So I've got this level here, I got that level there. This is a great trend line, right? I hope we get to use that trend line tomorrow. It does seem a bit unrealistic right now. And then, of course, this trend line coming down overhead, that using that channel. All right, so these are going to be the key resistance levels that we're going to use to basically time the entries for tomorrow. Now, a shallow pullback. A shallow pullback, at the very minimum, I'd like to get above that 86 level, right? That prior swing. The big problem I have, though, is we're pretty much back inside that range right now. So if I want to get aggressive on a shallow pullback, what I'll have to do is look for a trap entry. Now, trap entries are great anytime I'm concerned about selling too low. And so what you want to anticipate now is if we don't get a really deep pullback, let those buyers try a couple times here and look for that little trap above that high. Traps are really, really powerful, again, when you're worried about selling too low. That's my first favorite entry for tomorrow. My next favorite entry will be up inside this battle zone overhead, which is really where I hope we get our setups for tomorrow morning in our trade room. Now, if we do get that pop going higher here, again, let's say we do end up inside that battle zone, that sell zone, as I call it, right? I've got my trend line coming down overhead. I got some areas of resistance up overhead. What will happen is the buyers will come in and they will likely try, we saw back here, right? They'll likely try to buy that pullback. And once they do, we can then use their stop losses basically as fuel. And then we can look for a combination entry, which of course we call a failure into a pullback combination. This would be my second favorite setup for tomorrow, right? It's a failure setup into a pullback combination. These happen a lot, right? Strong move down, price goes above the moving average, they pull back, the buyers try, and look what happens, right? They fail, they pull back right away, and they run. That is a great example of what I would love to see back here, right? Get up above that moving average, get those buyers to come in and try to commit to it, and then I can use their stop losses as fuel, and then don't forget to grab that little trap or that little pullback, right, on the way back down again, and it usually will line up right around that same spot, right? The failure into a pullback combination. Now remember, the targets on these trades are back to retest those lows, and then keep in mind, right, it may end up settling into a range from there. It may keep going lower. We'll talk about that here in a second. Now, my third favorite setup, and this is the one that I would kind of hope we get tomorrow. We'll see. I would love to get this thing to go up inside of this area, up overhead. Again, it does seem a little bit unrealistic because of the strength of this move right now, but who knows? There's a big round number at 4,200 up there. For all I know, we'll get some news overnight that will get the market all hooping and hollering, right, going higher, and it'll eventually come crashing back down. Anytime we see this much strength in one direction, you can be very suspicious of a deep pullback, right? Any deep pullback here will likely be seen as a selling opportunity. Now, here's the hard part. If we do end up all the way back into kind of what would be my dream come true area, now the problem is momentum. Momentum is really, really strong now for those bulls. So in these situations, what I like to look for is what I call a nested variation of that failure pattern. Now, what I would do, again, on a modest pullback is I would wait for the buyers to try and fail and sell into their stop losses. The problem is, though, when markets really start pushing on strength, there's a lot more firepower now on that next pullback. So I let the buyers try twice. Let them try once, let them try twice, and you'll see an example of this on the gold in a little bit later on in this video. But there are two basic ways to enter this trade. I can, of course, use the easy way, right? Use those stop losses as fuel to sell into stop losses. Another really, really great way to do it is to draw a hidden channel off that low up around that high, right? And short off that high. That's another one of my favorite entries off there, right? So again, it's a nested failure, right? That's what we call this, right? It's a failure pattern. And then one more thing here. These are notorious for these big moves down and these trap entries right before they finish off a retest of that low. So this is my third favorite setup here on the S&P going into tomorrow. Again, it's a really deep pullback now. It's deeper than I think we'll probably get, but again, I can always dream, right? That's my favorite setup for tomorrow. One try to absorb those buyers' momentum now. And again, right, do we get that nice clean short off the trend line up there, or do we have to sell into those stop losses? Both of those will work just fine. And then remember, as we go lower, there's oftentimes going to be that little trap right before we retest those lows, right? My three, right? Again, a failure, right, into what we call a bull trap, right? A trap entry on the way back down to those lows. Now, guys, these combination setups, right? We see a lot of them in both ranges and trending markets. Right now, I'm just kind of drawing on the screen right now, trying to illustrate what I'm looking for tomorrow. But I'll tell you, I have so much more information along with hundreds of examples of these failures into traps and combination setups. I have a lot more to share with you as part of our free trading course. So if you haven't done so yet, I would definitely I'll put a little link up there for you guys in the upper right hand corner. If you want to see more examples of those setups, if you want to see more of the rules I use, the specific entry triggers we use every day in our trade room, I would definitely grab that free course, a little link that popped up there. Grab the free course. That way the next time I say a failure into pullback combination, you'll know what they really look like, the rules we use, and when to apply them in the right situations. So now you've got a pretty good idea for where I would like to be trading tomorrow on the S&P 500. There's going to be some variations, obviously, right? So again, if we do go sideways here, if the market does end up trading sideways here, what do we do then? We find levels of resistance up above the range, and we look for a pop-up, and we use those buyer failure patterns, right? We call them failure patterns to sell back down. There's a good chance at some point tomorrow we're going to see that pattern. It may not be early in the day, right? It might be later in the morning or early afternoon once the market starts going sideways. But that is definitely something that'll be on my radar for tomorrow. Also, if we do end up, let's say we keep on grinding lower, right? What do we do if the market keeps on grinding lower? At that point now, we look for traps. Right? Traps off those highs, traps above prior swings. So if it does keep on grinding lower, now we know this market is in kind of runaway mode, and we'll switch to looking for traps up above those highs. The best situation would be off the top of a new, right, hidden channel there. So if we don't get that pullback and the market keeps on grinding lower, I'm going to update my channel, right? I'll find my traps, and we'll look for those nice strong signal candles trapping high to finish off what could be a very big move down, right? I got 63, I got 41.40 half, and then probably not tomorrow, 41.20 half here. That's that big low from a few weeks ago before this whole move went higher here. Last but not least on the S&P, how do we buy this market? It takes what? It takes a small miracle was what it takes. All kidding aside, though, we need to get rotation for the buyers. We have to get some momentum going for these buyers right now. One thing is for sure, we have a ton of momentum down, so anything that pops higher is likely going to be sold, so be careful. Be careful trying to pick a bottom on this market. I think one of the hardest parts about this right now is you've got this very obvious lower high off that all-time high. So, in all reality, even if we do get a real strong move higher here, we're going to have a hard time with that falling level of resistance. So, I have a very simple way to trade reversals. I always like to look for those 1, those 2, and those 3 reversal patterns. My big problem right now, again, once I get that 1, 2, 3 reversal, I'm going to still have to deal with that trend line coming down overhead. I'll mark up that high, I'll mark up that low. Well, what I'll be looking for, though, is getting through that area and using it on the other side. This is going to be tricky. It's going to take a while to really give us. Because think about it, we have to get the momentum back in hands of the buyers, right? And there's no way I want to buy this move right now. There's no way. I've got to wait for a strong move, right? Basically, wait for that 1, 2, 3 reversal pattern. And again, normally I would buy that first pullback. But in this case, though, with that trend line coming down overhead, I'm going to have to wait for that up and over and grab it on the other side. So that will be the way I'll have to buy this tomorrow. Believe me, I don't like to have to watch this thing go that far, but there's no other way to do it right now unless you want to just gamble, right, and buy that first pullback, which again would normally be a great trade, but with that just obvious trend line coming down, I mean, we could literally see this market. This market may run all the way up. The buyers may try once, the buyers may try twice, right? We might get that hidden channel, that nested failure, and it may collapse all the way back down again. That'd be a fantastic trade, right? That'd be a great trade. Think about the risk reward on that sucker. So just be careful trying to buy this thing even after a reversal. And again, I'm sure there'll be some variation I've missed tonight on this video. So tomorrow morning in our trade room, I'll make sure we fill any blanks that I may have missed on tonight's lesson. Next up, the Nasdaq here. The Nasdaq is very similar to the S&P, but in a lot more dire scenario right now. The S&P, of course, is coming off all-time highs. The Nasdaq is a world away from its all-time highs right now. The Nasdaq is definitely bearish. There is no doubt about that. We are sitting right at a major low here. In fact, it's like a cliff. If you look at this on a larger time frame, I mean, we have to go way. I mean, look at this. I can't even find the data back there. It's a long drop down. And what I find is very interesting in the Nasdaq right now is if you look at this as a wedge, which is what it is right now, look where that wedge puts you. 13,000, right? Don't tell this to the buy the dip buyers. Don't tell this to the perma bulls out there, right? That wedge is very convincing at that 13,000. Now, are we going to 13,000 tomorrow? It doesn't look likely. It doesn't look likely right now. It doesn't look like it's possible for tomorrow. But think about that for the next couple days. Again, once we start seeing those inflation numbers come out later on in the week, this could end up being by the end of the week here, 13,000 and change here as we go lower. It's a bear market. It's a wedge, which is very interesting. Wedges, we don't see wedges very often. If you join me in the trade room, I will always tell you wedges are not my favorite condition to trade because they are very emotional. Wedges do not allow for what I call proper rotation, right? So we draw our channels, we find our hidden channels, and wedges can be tricky because you're not going to get that full pullback. You know what I mean? We draw our channels, we find our full channels there, and we never get that pullback, right? So that's why, again, if you ask me, I will say that wedges are not my favorite flavor of the market, right? I'm a bigger fan of regular trends, channels, and ranges are my favorites, but wedges are pretty straightforward. Most wedges will have 3 legs to them, right? 1, 2, and 3. I've got the measured move you can see here off of that leg right there, right, to get that measured move. So we may end up kind of grinding down. And again, a lot like the S&P, big move down in one day. Don't be surprised if we see a range going sideways at some point tomorrow, right? It may be a bounce up, back down into a range to finish the day. It may grind lower into this measured move and then go into a range. And remember, if we do end up getting that trading range, what's the plan? The plan at any point, whenever we see a bear market into a trading range, what do? We find levels of resistance above. And what do? We look for those failure patterns coming off the moving average at resistance levels above that trading range, right? That is always going to be on my radar for tomorrow. Now, a lot like the S&P, it's tough to tell how far the pullback will go, right? We might get a shallow pullback. We might get a really deep pullback. One thing is for sure, we know the bears have control, and anytime we see a real strong move in one direction, we know we're probably going to get a retest of that low. My job right now is to figure out, okay, how far is this thing going to pull back? And depending on how far it pulls back, what's the safest way for me to short this sucker? So anytime I see a wedge, I always think traps, right? Anytime I see a wedge, I always think traps. If I was recording this video at 9:45 tomorrow morning, I'd be telling everybody in our trade room, I'm looking to short that trap right above that high. In a more active environment, right? It's overnight right now. If this was at, again, if we were at 9:45, 9:15 tomorrow morning, I would be telling my clients, I'm going to split my position in half, right? And I'll basically look for shorts off of that trap and that trap high right there. In a wedge, remember, wedges are very emotional, right? They don't pull back for us. So the hard part about wedges is sometimes they're shallow, sometimes they're deep. It's difficult to tell, okay? So again, under normal conditions, I would split my contracts in half, right? So if I'm trading 4 contracts, I would cut that down to 2 contracts. I would plan on, right, trap high, trap high. And the reason why I do that is because I want to make sure I don't miss the shallow pullback. But if I do get stopped out in the first one, I want to have enough bullets left in the gun, right, to hit it again. And a lot of times what will happen is you'll get stopped out on the small one and you'll get in on the bigger one. And because these wedges are so strong, right, you'll make up for that loss in the runner, right? The market will just keep on running because, again, it's a wedge. It's a very emotional market. Now, again, that would be my plan tomorrow if it was 9 o'clock in the morning, 9:45, 10:15. That's not unfortunately where we're at right now, right? We're now in the overnight right now. Asia's opening up here. And so I'm not going to be as aggressive, right? The emotions are not as kicking in as they would be in normal conditions. So it's very similar here to the S&P 500. My first favorite setup here would be if we get that shallow pullback, right? Shallow pullback. Again, I'm going to go a little more conservative on this because it's overnight, right? I don't know how the market will react in the opening bell. You now know what I would do, though, if it was at 10:15 tomorrow morning. My first favorite would be a shallow pullback trap. Target, of course, is back to retest the low, and I would leave a little bit of it to grab that measured move right at that 245, 246 level as we go. The next one's going to be what would really be probably my favorite for tomorrow would be, let's get up into this trend line up here. Let's get above that prior high up there. In all reality, it could be, right? It could be that little range right there, in all reality. So I'd like to get this thing up inside that secondary battle zone. And if I can, get up into that secondary battle zone, right? Get those buyers coming in. Buyers try to buy the pullback. We now know exactly where their stop losses are. We can use those stops as fuel. We have all of that momentum, leaving that big bullseye right back on that low, right? The bears want to get right back to retest that low. Once those buyers commit, all their stops are sitting right below those lows there. I can use those stops as fuel, and then I want to try to get in right on that pullback as we go. Failure pattern, pullback pattern, combination, Target, of course, is down at that low. That is my second favorite. Again, same thing as the S&P. The third one here, and kind of the same thing as the S&P, right? What I would love to get is up around these major, right? These major levels up here. That's where all the bears really want to short, right? That 13,460 to 13,500 area. Now, as you can imagine, if we end up that far up the ladder now, it's a great spot to get short. But what's the problem? Momentum is really strong now, right, for these buyers. We're not just barely getting above the moving average and getting that 1-2 trap, right, like that, right? Like that will be, that's a great example right there of a shallow pullback. I'm not going to get, this is not a shallow pullback now. I want to see that big pullback. And this point now, just like on the S&P, right? Let those buyers try once, let them try twice, right? I can sell into those stop losses. I can grab that channel off that low, off that high. And remember, these are great because these will oftentimes trigger. The market will collapse. And right before you retest that low, you don't want to chase it, obviously. You don't want to sell low. You want to sell high. And oftentimes, you get the little trap right there, right? Again, it's what we call a nested failure into a trap, right? Entry back down to retest those lows. And then one nice thing about this, this Nasdaq is there is plenty of overhead space here if the buyers did want to take control tomorrow, right? I'm definitely not as concerned here because the trend line is way, way up there, right? There's a ton of open space in the Nasdaq. So, if these bulls can get their act together tomorrow, they have no momentum right now. There's no way I'd want to buy this market right now. But I'll tell you, if the buyers, if they can get a strong pop off these lows, right? Maybe some news comes out overnight. It's good for the tech companies. It's the big tech companies, all the FANG stocks, all the companies that made gajillions during the lockdown. They're just giving that back right now, right? People are taking their froth at the top of the markets right now. But if the buyers, if they can hold this thing and run, if we can get that 1, 2, 3, right? Strong move up, pull back, jump off the moving average. Remember though, it's not the strength of the pullback, it's the strength coming off the moving average, right? If we don't get that strength, we're looking to sell this thing right back down to that range again, right? Back down to those lows again, right? So we got to get those buyers to hold it. If they can hold it and give us that 1, 2, 3 reversal, now it's on. Now I mark up that high, I mark up that low, and unlike the S&P, I have a nice clear line of sight now to buy the low of that channel. Now, please remember, I never just blindly buy levels, right? I'm not just leaving a buy order there at that low. My two favorite entry triggers off the low of that 1, 2, 3 reversal would be a bear trap and a seller failure pattern. We oftentimes will see those trap lows into failures, into pullback combinations, right? Think about that area right there. We oftentimes see some traps, some failures, some pullbacks for that rally going back higher here. And again, I'm not going to go over all the details of all the entry techniques we use in our trade room here. We'll be here all night. This video is already long enough here. But if you do want to get a deeper dive and see, again, I have hundreds of examples of these setups inside of our free trading class. If you want to get access to that, though, grab the link up there, that little info icon in the upper right-hand corner, and you'll jump right into the free class. You'll learn all the entry setups, and that way you'll be able to get the most of our time together every evening on this video. The buyers would love to go back up and get right back up into that range where it came from. There's no reason why they can't. A market that can move this quickly one day can easily give it right back the next day. So there's no reason why it can't happen. Now, am I going to think about doing that right away right now? No, of course not, right? The buyers have no momentum right now. And again, as we go lower here, be watching out for a range, right? Be watching out for a range down here. The range may come at any point tomorrow. Once you see that overlapping candlesticks now, find those levels of resistance. Wait for those breakouts. The hardest part about ranges is not believing in that breakout, right? Don't trust that breakout. Wait for it to come back. Wait for those breakout pullback traders to commit, and just wait for that magnet, that range down there to bring that sucker right back down again. If we do keep on running lower here, not a lot changes. I'm still going to be looking for that same shallow pullback trap, right? That deep pullback failure, that really deep, right, nested. And we'll obviously know more about that tomorrow. But again, think about it. Shallow pullback trap, moderate pullback, modest pullback failure, deep pullback, nested. And again, I apologize for using the terminology, but if you want a deeper dive into that, if you want to learn the terms, learn all the setups I'm talking about, grab that link in the description here of this YouTube video and grab that free trading course. We are looking good here on the Nasdaq. And again, what do you think? What do you think? What do you think? By Friday, do you think we hit 1,300? What do you think? By Friday, 1,300? Or not at all this week? What do you think? Give me some feedback in the comments section for me. Right? What do you think? Is it 1,300 by Friday or not at all this week? What do you think? Right? Let me know in the comments section. I'd love to hear what you guys think about that wedge and whether you think this is a buy the dip here on the Nasdaq. All right, let's keep going. Let's keep going though. Get the gold to wrap things up here for us on this video tonight. Gold is, again, the Nasdaq and the S&P are relatively straightforward. Gold is pretty easy. You got gold. We're definitely bullish right now on the yellow metal. We've got that range from last Friday's non-farm payroll report. We talked about this, right? If there was one market last Friday, we anticipated a range. It was gold because of non-farm, right? The non-farm pay report. So, of course, the day ends at a range on gold. They break the market running higher here. They take out those highs. And now it's looking like we're going to be looking for a pendulum swing, what we call rotation off the high, back in the opposite direction. What you want to remember is that whenever we have a range on the chart, that range acts like a magnet. So what will happen is the market will run above the range, run into some level of resistance up here. Usually it's going to be a measured move or a prior swing from a previous level. And what happens is now is this range below us acts like a magnet. But what really goes on though is once the market ends up back inside that range, momentum starts to build. Right? It doesn't just stick back inside that range here. Momentum starts to build here for those sellers. I can mark up that high. I can mark up that low, and that creates a nice target for that pendulum swing on the other side. So we're trying to capture now that rotation. The thing is, I don't want to trade inside this range. The range is a magnet, but it's kind of off limits. You want to try to stay out of the middle of that trading range. So, I'd like to be a seller on this right now. Use that range as a magnet. I've got the buyers, you can see here, already digging themselves a grave now. If I can get a trap above that high, oh my goodness. Now, this is another example. If I was looking at this at, 8:30 tomorrow morning, I wouldn't need that trap, right? I would just use that trend line. It's a great example here of a nested failure, right? So there's your range below you, acts as the magnet. There is your pendulum swing. And so again, if this was tomorrow morning, we get a lot of liquidity, a lot of good personality. I would say 1, 2, mark up that low, mark up that high, and I'd be selling off the high of that channel. Again, we're not in the middle of the US session right now. Liquidity is not as good. It's overnight. So for right now though, I want to be a little more conservative for it, right? So I would want to see that trap. That would be my favorite setup here for tomorrow. Right, would be that trap high above that high. And again, it kind of kills two birds with one stone, right? It gives us that channel test, trap high on that. That would be my favorite way to do it. Now, remember, a lot of times these traps, these nested failures like this, a lot of times they'll come swinging back down again, and you'll be able to grab a new channel, right, and short the top of that channel. Okay, now these are pretty good because again, you get that pendulum swing. Trying to finish off on the other side there. Again, short that trap off the high. Great setup there. And then again, it'd be a bull trap. It's a buyer failure, right, off the high of that channel, trying to complete that pendulum swing back in the other direction. So my favorite setup here for tomorrow would definitely be with these buyers trying a few times, right? Can I get a trap above these highs? And then short that sucker back down into that range. And then again, look for that follow-up here off that low, off that high, ride that momentum. Because again, where they want to go. They want to get that pendulum swing. And with all that momentum going lower, everybody wants that short, right? So looking for that short off that high there. That'd be my favorite way to do this for tomorrow. Now, another possible scenario here is they take out these highs. Okay, they may take the highs out. If they take out these highs here, that really does a lot for the bulls. It really does. That it pretty much reminds us, hello, the buyers are still in control right now because this is a bull market. This is not a bear market, right? I want to say it again. This is not a bear market right now. It's a bull market. It just has a range underneath us, and we've got evidence by buyers trying a few times that if we can get a trap high, right, or off the top of that channel, that'd be a decent place to get short here. If they do get this thing to run back up to retest the high, though, that's when all of a sudden now we have to reset the count, if you will. Now what we'll do is, and this will be my second favorite setup for tomorrow, again, if they retest the high, it basically reminds us, hey, buyers here, we're still in control, right? So if you want to sell this thing now, we wait again. 1 try for the bulls, 2 try for the bulls. And again, right, do I get that trend line off of that high? Do I get really lucky with that trap above that prior swing? That's kind of what the second scenario you want to think about here for tomorrow. The third scenario I'll be watching for here would be as we go lower. And we'll kind of think of this maybe as a third and fourth setup as we go. If the market was to tumble and run lower here, you know where they're trying to go. They want to take out that pendulum swing on the other side of the range. If they do run it lower and we know where it wants to go, what's my concern? I don't want to chase it and sell low. So in that scenario, what I'll do is I'll look for traps, right? Traps are always my bread and butter whenever I'm trying to avoid, again, selling or chasing a market lower, right? So as the market runs lower here, in other words, if we don't get that pullback and that shot to sell high here, the next best thing with that trap off of that low, and remember, extra bonus points for lining up that low, lining up that high, right, and hitting it off the top of that channel. We see a lot of those every day in our trade, and we can combine the top of a channel with a trap high there. And again, the targets, of course, are on that pendulum swing going back down to that low here. But the fourth one here, right, the fourth one is, let's say we do end up back around those lows now. Can I buy this thing? Oh, yes, we can, because now we are underneath a bull range, right? If we do end up back down to that low here now, how do I buy it? Well, remember, I'm always asking those two important questions. How's my momentum and how's my location? You always want to kind of pass that test, right? Before I take any trade, I always think, how is momentum and how is location? First of all, location then is great, right? It's great to be a buyer underneath a range. The range above us is a magnet. But what's the concern? Momentum. Momentum is not going to be friendly for the buyers. Now, we've talked about this pattern a lot of times already. If we do take out that pendulum swing and then we start seeing these bears, right? They try once, they try twice. That's right? Draw that trend line. Look for those failure into pullback combinations, right? Failure into pullback combinations. Again, failure is off the. Remember, what you're doing is you're waiting for the bears trying twice, right? You're waiting for them to try once. You're waiting to try twice. Why twice? Because of all that momentum. It's foolish to get that aggressive, right? Like back here, right? The buyers in this situation, they're going to try buying a couple times. Then I can short, right? I don't want to short too early because I'll get stopped out, right? I can be in the right location, but if I'm too early on the entry, I'm not going to make any money on it, right? I got to wait that same idea down here. Let those bears try a couple times, right? Then hit them where it hurts. And then again, a lot of times these things will reverse and you can grab that next pullback, right? Again, I'm not just blindly buying that pullback. I'm looking for bear trap entries. I'm looking for seller failure entries as we rotate back up into that trading range again. And again, you'll see a lot of examples of those setups in our free trading course linked up in the upper right-hand corner. All right, so keep your eyes open, even if we do, right? We might get lucky. We might get that nice strong pop, that big drop down, and then the bears start going, oh shoot, I can't get anything going here. 1, 2, stops are sitting right above those highs now. Rising support there, right? Failure into pullback combination. That would be a very, very good day for us tomorrow morning in our trade room, right? Sell off the high, buy off of those lows. And also, too, let's not forget, right, if we do end up rolling lower and those bears can hold that pullback, what's that called? That's called a 1, 2, 3 reversal, 1, 2, 3 breakout. Mark the low, mark the high, and short that sucker, right? The first test off the high of that channel, first test is always the best test. All right, guys. I've taken up too much of your time at this point, though. I'm not going to go into more details on this because we can do it tomorrow together in our trade room. But hopefully now you know kind of what I'm looking for tomorrow morning and every morning, right, at the opening bell. Now, gold's ready, S&P's ready, Nasdaq's ready. I hope I'll see you tomorrow morning, 8 o'clock Eastern time. We'll get together. Like I said, learning to trade is difficult at first. It's so much easier when you do it with me in the trade room. Come out and join us every morning. I'll put all of the membership information you guys need. I'll put all that in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put all the details right below me on the video. Don't be afraid to call the office. I'm always here to answer the call, answer all your questions. I've got live chat on the left. I've got live chat on the right. And you can always drop questions and comments in the comment section below. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.